Hello and welcome to today's video. Now in today's video we'll be taking a look at the market as a whole, plus also we'll be looking at ITC, as I believe that stock has a very interesting setup, and I will look at it in terms of what it's going to do, but also in a very educational manner, we can say. Now before we dwell into the video, I would like to remind you to like the video and subscribe to the channel, and if you have any comments that you believe can be helpful to the channel, then do drop them in the comment section below. Now before we look at the indexes plus ITC, we have to see what news is going to affect the market this week. Now this week is going to be a very heavy news week for the Indian market and the markets across the world. I said that let's say if we look at first the international market, on Tuesday the March 12th inflation numbers are expected, and the CPI is expected to be roughly the same at 3.1%. Also then on Thursday there is the retail sales and jobless claims data for US. Now between also Wednesday and Friday there is some other data coming out, but the main data which I believe has to be focused on is the data on Tuesday and the data on Thursday for the American market. Then coming to the Indian market, also on Tuesday we have our CPI inflation data coming out. The inflation level is basically expected to be a bit above what we saw in January. January came in at 5.1%, and it's expected to be a bit above due to increasing food and core prices. So basically that is a very important data, and that is going to hold a lot of importance because between April 3rd and 5th is the next RBI policy meeting. So this data is going to be very key in helping the market to know what is going to come in the next RBI meet. Then also we have the wholesale price index inflation data coming out on Thursday. So it is a very data heavy week. Then when we look at the IPO side, also this week is going to be a huge IPO week. So expect a lot of cash drain from the market, which will cool down the volatility a bit. I expect this week to be rather volatile, but I think that will cool it down, I would say 50%. I say this as a total of 7 companies are opening their IPOs this coming week, and 8 new are listing in the market directly. So it's going to be a very heavy for news week and data week for the market as a whole. So basically I expect that to affect the markets. Now when we come on to our first stock we're going to look at is ITC. Now when we look at ITC, I'll move my head there, and I'm going to look at it in terms of the daily chart and the weekly chart. I say this as ITC is having 2 different images and 2 different charts, and this is going to be very important for most people to understand. Now if we unhide all the levels, now ITC is basically, ITC had a big fall in Jan of this year, and the whole of Feb it has spent roughly in this box range here, and that helped it manage to hold the support at 398.40, which has basically been acting as a lifeline. Now the reason ITC is at a critical phase, as if we look at it, ITC on the daily chart has formed a very good candle pattern. It basically formed a hammer sort of pattern, then it got a confirmation in the next candle. Then after that also we see there's been the volume build-up is still bearish. However, there's a huge improvement in the volume build-up, and it's come to about, before it was about 10% bullish, 90% bearish, it's come to 40% bullish, 60% bearish. So that's a huge improvement. And then we can see the trend catcher indicator has been gradually going up, and now it's going to start attempting to go and take out the 0 mark. If it goes above 0 and this changes, then ITC will go up. However, I believe this is just a short-term play, as this is going to be a trap for investors. Why I say this is, if all this works out and ITC is able to break 418, then we can see there is a heavy volume bar here with a falling window, and then basically another, this is not a heavy volume buy, it's just a simple big black candle. So this is going to be a huge task for ITC to cross, and I do not believe if we break 418 then we will go to 430, 445, 430 to 435. However, I don't believe we'll be able to break above this resistance zone. This resistance zone is simply too tough. And why I say that, it's a trap. Now when we come onto the weekly chart, now the weekly chart, if we look at it simply in terms of what's happening in the terms of the price action, we see ITC formed a big large volume candle bar. Okay, these all were big black candles. However, this was a black candle with high volume. So that candle is going to be deciding the whole factor. And we see it has slipped below the 50-day moving average in the weekly chart. Now, it has been holding this and it has done a very good job at it. And if we put the daily chart analysis with the weekly chart, we see that basically ITC, if it breaks 418, it will go to 430, 444 to 435 as we said in the daily chart. Now that will have just gone into the high volume bearish bar, and that will have basically satisfied the condition of having a pullback and then a fresh drop. So how I expect ITC to play out is because of that. And even if we look at on the weekly chart, the trend catch has come below zero, and it's going to try to join here, then come down again. And the volume build up, you can see it has just been getting worse every week. Last week, Friday candle might be looking better, but look at the weekly volume build up. It has got worse than even the weeks before. So I believe this is going to be basically dead cat bounce. We are most likely, because of the daily setup, will take out 418 and then go towards 430 and 435. So basically, short-term traders like me and a few who are doing very short-term equity trades also, and FNO can aim for this target that so 418 breaks, we go to 430, 435. There it's time to take your profits and start looking at selling, basically selling calls above 430, 435 for a drop back to 398, then 370 and 350. This is as I believe ITC is going to play that game on everyone. We're going to rise here, then fall back to the 398 zone, and that time I'm pretty sure we will take out the 398 zone and go to 370 and 350 we break 370. So ITC is bullish in the short term daily chart, bearish in the weekly medium term. It is a perfect dead cat bounce forming that's going to ensnare a lot of basically traders. Now we go on to the next one. Before going to the next one, let's go to 20-minute chart, because that's what we used for the Nifty last time. Now when we look at the Nifty's chart, last time when I covered the Nifty last week, I had said that it will be stuck between the high of the previous day and the support between 22,520. Until it's in this range, it's not going to go anywhere. Exactly that happened. As we can see, we've just been dilly-dallying about in here. So now it will be very important for us to see whether we hold the support here. If we by chance break this support between 22,480 and 22,520, then Nifty is in very big trouble. However, we can see that even though the volume build-up is poor, we're nearly touching zero, so it's going to attempt to bounce most likely here. And also, if we look at it in terms of simple price action, we have a high volume bar here. Okay, we have moved quite away from it, but you can take the top of that candle as a support. So this also falls between 22,480 and 22,520. Hence, this support range will most likely save the Nifty. And if it holds on to this support range, then we'll be going back to test the resistance at 22,600 and break that, we go to 22,700. As of now, this support range is the critical zone for the Nifty. As long as we stay above this, we are going to go to 22,700. However, if we break this, we can see when the high volume candle will have broken the support high volume candle had formed, plus the quant supports at 22,480 and 25,20, and that will cause one hell of a crack. So this support zone holding is very important. Now we'll take a look at the mid-cap Nifty. I'll try to look at it quickly as this video has come longer than anticipated. Now when we look at the mid-cap Nifty, the mid-cap Nifty is exactly trading, as I had said last time, the range between 10,780 and 10,960 is a no man's land, and we can see what has been happening here. As the first time we had given the support at 10,780, 10,720, and at the beginning of last week we gave the support and we fell towards it. That support held and we went back up. Now mid-cap Nifty is at the 200 moving average. If it holds this, then we'll be going back towards these two resistance zones that are key. By chance we take out these two resistance zones, then high likelihood we'll reach 11,290. Forget 11,120, we'll blow through it and go to. If we manage to take out these two resistance zones, these two are very key in the whole game. On the other hand, if we break this support range which I had given at the beginning of last week and has been holding us up, then we're going to go down. It has proven itself last week as a very good support. So now it will have to do its job of making sure it continues holding. But there is a high likelihood that it will hold, and we'll make an attempt for 11,030 and 10,960. Only we need to, the people using my indicators, watch the trend catcher, as that's going to signal if the black line and the red line can come back above the zero, then it is golden. So that is it for today's video. Thank you for watching, and if you did like it, then hit the like button and also subscribe to the channel.